In this episode, I actually bring you behind the scenes. I talk to the head person at PHP, People Helping People. It's a network marketing style life insurance agency. They got thousands and thousands and thousands of agents, and it's very, very interesting. I have thoughts, I have opinions. I ask questions like whole life versus IUL, the thoughts around network marketing, what his thoughts are on infinite banking, and I'm sharing all the behind the scenes before our interview actually drops on our channel. So you'll kind of get the backstory, the things that I really, really like about my interactions, and then some of the things that we will be pushing back on as well. So ladies and gentlemen, welcome back to the fastest growing life insurance podcast in the entire universe. My name's Caleb Williams. I'm here with Dominic Roofran. I got the first name and last name. You're not Dom anymore. I heard on a meeting that nobody calls you by your full name, and so I think
first name.
I think that's might be the trend that we need to start doing. Is just call you Dominic, and that's what your mama wanted, right?
I don't know what my mama wanted, but
well, I'm at least I think it's a safe assumption to say that she liked the name.
I think it's probably what my dad wanted, knowing his name is Dominic. So that's
okay. maybe there's some more to the picture, but that's not what we're going to talk about. Today, we're going to talk about a fun experience that I had. For those of you that are involved or know the insurance space, you know that there's different groups of insurance. So we're what's considered an independent agents. And so we have an agency. We represent a lot of insurance companies. We primarily work with whole life insurance carriers. And so we have the ability to work with multiple different carriers, and we control that. That is kind of unique because it's when you're first getting into the insurance space, you usually need to tie your wagon to somebody, an agency, a general agency, a company. And so the route that we went worked, but it's not necessarily something that I would recommend for everyone to try, but it worked out for us. Now, the reason I kind of mentioned this is there's other ways that people can get into the insurance space. They can join an insurance company. Northwestern Mutual is the one that comes to mind. They recruit people. You can work with other insurance carriers, but you're employed from Northwestern Mutual, and you're a part of their program. They have a whole internship program. Then there's IMOs, and IMOs are just a fancy way of saying we're going to be independent, you're going to be a part of our IMO, and we'll get you contracts with other carriers. The IMO makes money because they make a override. When you sell, they get a part of the commission. And the value that they give you is they help you understand products, and they also connect you with companies. And then there's obviously the route that we took, which is, directly work with multiple of these companies. The pro is you get really good relationships. The con is you got to do lots of business to be taken seriously. And so it's not always easy to get off the ground. There's a fourth way that people can get in the insurance space, and it's not I wouldn't say it's the way that a lot of like industry professionals, think highly of, but it is a way, and it's the network marketing style business where you can join some people call it MLM, some people call it a pyramid business, some people call it network marketing, but the idea is of network marketing. If you think of like Amway or other companies out there, there's for sure pros to that model, and it very much incentivizes you to bring on other people, build a team, and also sell in this case insurance. And there's a couple groups out there. There's World Financial Group that many of you have heard about, and then there's also a PHP, and PHP I think stands for People Helping People. And Patrick Bet-David, who has got one of the largest podcasts out there right now, was the founder of PHP, and he sold it a couple of years ago. But he's still, if you think of PHP, you think of Patrick Bet-David. Why did I open up with that long monologue? Well, we've actually done videos in the past when it comes to PHP. There've been older videos, and I think there's a lot of things that we could probably dunk on or push back on why the network marketing style selling life insurance, getting your mother and brother and best friend to sell insurance, like why that could be a disaster, like quite frankly, like why that could give you a bad stigma, why there could be pushbacks to that. And I think there should be pushbacks, rightfully so, but there's also advantages to it. And the advantages are you're getting people in to hear about life insurance that maybe have never heard about life insurance, and you're motivating people to potentially be incentivized to get more people insured. Why am I sharing this? Well, I had the opportunity to sit down with Matt Sapaula, who is like the face of PHP. He's like the Filipino Patrick Bet-David, who's like been working with Patrick for over 10 years. And then when PHP really, got sold, he's like very much the face and really much taking this thing on. And I got able to be connected with him, never met him, so didn't really know what to expect. He was having his large convention in Nashville at the Gaylord, which is just a massive hotel. Like you got to get there like 30 minutes early just to find the place. That's how big this hotel is. It's large, it's very impressive. And they had over 2,000 people, Dom, come out, travel, and with PHP out at this convention. And we, because of our channel, because of our momentum, thank you for all the people that follow, subscribe to the Better Wealth channel, this channel. Like it literally makes me reaching out to people like Matt possible, because they look at our channel and they're like, yeah, well, Caleb can come and do an interview. And I sat down and wanted to ask him about IULs versus whole life, because I know they're primarily IUL focused. Wanted to ask him about infinite banking. I even asked him a question, Dom, about the stigma of network marketing. I wanted to hear his story. I wanted to hear his money frameworks, his aha when it comes to insurance. And we had a phenomenal time. We had a wonderful time meeting him. Our interview is good. Stay tuned. If you're not subscribed to the Better Wealth channel, be subscribed to the Better Wealth channel, because we'll be dropping that. And I thought in this episode, we could just talk about some of the things that I learned. I kind of think of our conversations, Dom, as some of the behind the scenes of what people see. And there are many behind the scene thoughts that I have, some good, some bad, from our conversations. But I just want to say, going in, I didn't know what to expect. I didn't know if he was going to try to run over me. I didn't know if there was going to be a heavy ego fest. And let me tell you, Matt is a 10 out of 10 human. Like, he loves his family. He loves his people. He's got a pure heart. And he's all in. And he's passionate about protection. He's passionate about a lot of things and his people. And we actually even had a time to pray before I left. He asked me what he could be praying for, and I got to pray for him and his family. And so, like, from that standpoint, I have nothing but amazing things to say about him as an individual. And I also, I don't know the politically right way to say this, Dom, but the people that they attracted, he showed me like their convention, and there was over 2,000 people there. Just so you know, like, we're having our event in June, which if you're not signed up for, you should be signed up for. We're hoping to have 300. Like, it would be amazing to have 300 people. To have 2,000 people at an event is just bonkers. It's like, that's super impressive. And majority of them are young, and they're either African American or Filipino. Like, they're what's the politically correct way to say it? Like, they're in ethnic groups.
Ethnic minority.
They're not white. That's what. Okay, and there was some white people there. Just put out for the record. But
you're white, so you can say not white, and I'm.
You look pretty white on this camera.
I know. I do feel super white right now. It's like, man, I need to get this.
I look.
You do look more darker than I do. So I'm like, geez, I just realized that.
Yeah. Believe it or not, Dom is. Anyways, so that I just want to props to him. And why am I talking about this? Because the average age in our space is old. It's kind of like the 60 plus year old white dude, And so the fact that there's organizations out there that are getting people fired up about insurance, that are speaking to people that may not resonate, may not be watching our channel. They're not watching our channel, but they're not going to go to a typical financial advisor, and they're getting people insured. And we actually did some of the back of the napkin math, and I think PHP is responsible for over $27 billion of insurance coverage, which is if you look at us, we're knocking on the door of 2.5 to 3 billion, and they're over 27. And that might be conservative. We just did some back of the napkin math. But that was pretty remarkable to just think the amount of families that they're insuring. And so that was really cool to see. And I very much I'm grateful for that. And then also and Dom, you can ask me questions and I can share a lot more. It was pretty evident to me when we were doing the conversation and interview. I asked him Matt, what's your framework? wasn't much of a framework. It was like values and protection. That was, and I'm like, okay, so how do you make decisions about investing, or like, talk to me about like, you're giving me like the Tony Robbins, like your rah answer, like what's your framework about money? And it was like, hey, your values matter, your family matters, and if your family matters, protect them. And at the real time when I was interviewing him, I'm like, come on, Matt. Come on, dude. Like, give me something. And then the more I reflect, I'm like, there's something really profound about that. It's simple. He doesn't get into illustrations. He doesn't get into like technical stuff. That over and over, I would ask him like, what's your aha about life insurance? The answer's not going to knock your socks off. Anyone that subscribes to our channel and watches our videos potentially could articulate more about insurance than what I was hearing from Matt. And he's running this massive organization. I talked to him about, whole life versus IUL. Very basic answer. He talked to me why he likes IUL better than whole life. But I think anyone that's like really technical will be like, well, you didn't really sell me. You gave some good talking points, but you didn't really sell me. And so that was interesting because it was not confrontational at all. I didn't want to be, but I went in asking some tough questions. But there wasn't really much to push back on because he kept bringing it back to values matter, family matters. If family matters, why don't we protect it? Why don't we maximize control? And insurance does those things and doesn't get into much of anything else. I mean, we talked maybe a little bit about retirement supplement. He did tell me that he's not a big fan of people focusing on income, which is a big win, by the way. If a head leader of this organization saying, hey, we shouldn't talk about income, although one of their headline speakers was Doug Andrews, and Doug Andrews has his plenty of controversies when it comes to IULs and how he sells them and income retirement. But we'll put that aside. He was clear about that, and I even got to share with him about like the cell phone analogy about your dollars doing more than one job, and I got to share like the more jobs your dollars does, the more attractive life insurance gets. And so all that to share, it was inspiring to see the amount of people that they're impacting. Do we disagree? I won't speak for you. I'll just speak for myself. Yeah, I disagree with how they do business in some cases. I don't necessarily love the network marketing style. I think that there's some challenges to that. I think they're facing that. I think he even said like one of the things that he's trying to get more professionals in the space because he understands the stigma. So I think that's something real that they're going to have to continue to wade through. But they're insuring people. They're getting term insurance. They're getting people insured. And I do think I do, and I've thought long and hard about this. Like, is the net negative, positive, negative? Before going in, I would have told you network marketing, selling insurance, net negative. And I think we could easily go down that path if we really wanted to do like let's talk about permanent life insurance and putting a ton of money, max funding. And I still stand by that. If we're really having the conversation, if you really want to overfund heavy into a policy and want it done right, and if you're talking to us versus you're talking to someone at like that organization, it would be a huge ego kick if we lost that business. It'd be like, whoa. So I still stand by like I think there's value in that. But what I realized was a lot of these people, that's not their motivation. They're starving for community. They're getting insurance. They're starting to save for the first time. And yeah, they might be saving or putting their money into a product that I may not love. It might not be structured the way that you and I would quote unquote endorse, but we're not necessarily talking about this or that. We're talking about doing this or nothing. And, it's hard to push back on, an organization that's insuring people. And, so all that to say, that was the world's longest monologue, but I wanted to set the stage to just say like, that was a cool honor. Excited for the interview to drop. And, it's fun. It's an honor to like have a channel that can get people's attention like this. And I do think also this was the other thing is Matt is now a friend, and he's someone that I'm going to try to pour into, because how cool would it be if we could influence organization like PHP to start changing some of their language? I mean, some of you guys know, like in the infinite banking space, we've been politely pushing back on some language. And, instead of just calling people out, we can agree to disagree, bring them on, and talk about our differences, but do it in a respectful way. And what ends up happening is those people change their language. And as the profession and industry, we should all be celebrating that. I walked away saying, I actually think that there's a world where we could influence this organization. And I just think like the ripple effect that would have would be pretty special. So without further ado, I just want to give people context and hear your thoughts. We can talk a little bit more about this. And then I know we got some questions to do Q&A on.
Amazing. One of the things that I think is really cool as I continue to go down my path of just being in the insurance space, financial space, is getting to live vicariously through you, thinking about my past. PHP actually used to be one of the first organizations that like kind of sparked my interest in education with Patrick McDavid, just learning from him, et cetera. And so I've seen him, all of these different people you get to connect with because of the platform that essentially has been created through Better Wealth. And it's just really cool to see that we're growing just naturally and trying to create a positive impact in what we're doing. Secondarily, just from a business perspective, it just shows that if you really believe in the purpose and the mission and your hair is on fire, you can create a massive movement. And that's really what matters in a lot of instances, especially if you believe it's your core that you're doing the right thing. And the thing that I really resonated with is that he had tons of consistency, regardless of the questions you asked, regardless of, whether it was a hard question, easy question. He constantly kept saying family values. And that's what he believes in more than anything. And so I really thought that it was just extremely cool to see that there was lots of humility, really just like taking all down all of ego, because I have had and do currently still have a very strong opinion on PHPs of the world, WFGs, to the point where I did a video not so long ago that talked about PHP, et cetera. But just because I have a specific opinion doesn't mean that they're not impacting hundreds and hundreds of thousands of people, because I do believe one way or another, like having insurance is better than not having insurance in a lot of instances, especially for lower income families. Yep. And that is the thing that I really respect about them as well too. When he started talking about like, we really want to start bringing in more financial professionals, like are more professional because we know that's the stigma. To some degree, I almost think like that's like a mistake in business. You almost should just like double down on what it is that you're good at, who you serve, and your avatar. And if they are doing a really good job at serving the underserved community, whether that's women's, Latina, African American, just lower income, societal, economic, like they should double down and continue to grow that. And now it's just, I think operationally, like how do we do that well? And I do think that they need to think through that, because the issue that I currently have is I think there's a lack of education gap and an over expectation of the reality of what's really going on. So people get really excited. I mean, I have a neighbor. She's from Uganda, and she found out that I was in the life insurance space, the financial industry, and she's like, hey, I'm part of this company, and she's like describing like WFG and all of these things. And she's like, I got my life license. I haven't done anything for like, almost like a year now. She's like, what do you think that I should do? Should I like renew it because it's coming up or what? And like, I went down this whole spiel of like, hey, like with where you're at, being a mom, you're more focused. Like, it's really hard in this space in general. Either you go all in, like, or really want to make it a full-time thing. So like, I just went down this thing and I said, hey, watch this video. After she watched the video, she's like, thank you so much for sharing with me like the actual truths of like how this actually is, because I didn't really have the full context. She's like, I'm not going to pay for my license. I'm not going to renew it. Like I decide like this is the path that I'd prefer to go down, just because now I have all the data to make the right decision. And I was in the same situation with network marketing when I was in college, but just with a different company, which was a travel agency. And I just got overhyped, oversold, and the expectations of reality was just like way off. And so I was like in the clouds, and the clouds created a lack of, and actually ruined a lot of relationships that I had. And I think that's one of the downsides is like, I would love for people just to treat it more like a business, educate themselves a little bit more on life insurance, and educate themselves just slightly a little bit more on how the product actually works. You don't have to be a guru or an expert, but just like one step more before, like, when Patrick McDavid started it, his whole thing was like recruiting first business model. And if you just like go into it just straight recruiting. It's like, well, you're recruiting
Yeah.
without context, and that creates, I think, a lot of misgaps.
And I will say this. So Matt was very busy. So the person he was interviewing before was a sales guy, meaning like a guy that they brought in, and he's got millions of followers and he helps people, better sell. And a big focus, even with Matt, like I literally asked Matt, like, your aha moment to insurance. And the answer he gave on the recorded interview was the business opportunity. Okay. So I've never got that in an like, Tom Wall, talk to me about your aha moment of insurance. And he's like, let me tell you how much money I can make by, it's like, but in some cases that's the honest answer. You know what I'm saying? So I think that is the challenge, and that's what makes Matt so great, and what made Patrick so great is he can sell that vision. And obviously you got to understand incentives, but that just plays to you. The model itself is tricky, and here's why. I actually don't have any problem with network marketing at all. I think it's like, hey, if the business model works, it's like we pay money to market. I could either pay Facebook, Google, or I could pay an individual. And if I can legally pay an individual to sell something, it's like that's that much better. And the idea is like when you pay Facebook or Google, you're not guaranteed business. If you're paying for in the network marketing style, like you're paying for actual acquired business. So from a business model standpoint, it's not terrible. And like things like Amway or like travel packages and all, like there could be a world where it's like, yeah, it gave you kind of like the bad feeling, and maybe you bought something that you probably shouldn't have, or you got like pitched something and you might be out a couple $100 or a couple $1,000, but it would be probably rare to be out more than that, and there's probably cases. The challenge here though is you're doing something like big, like a finance. We're not selling soap. We're not selling a vacation package that might be a bad idea. We're not selling a product. We're not selling, dishware. We're not selling lotion kind of deal. We're selling financial product, and that or a solution, a life insurance policy that for some cases should be there for your entire life. And then when you look at the income, the people that are going to get out, I even said, I think like most people in the industry are out, I think 80, what's this percent? Like I quoted something and he agreed with me. And so he's agreeing with all my points. And I just found it interesting because I'm like, do you think network marketing is one of the reasons that's the case? But you got to realize that there's a lot of different network marketing. And just like we're saying, hey, we sell whole life insurance, but we do it different. They have the same pitch when it comes to network marketing. Hey, we do things a lot different than other network marketing styles. So we agree with you. All the other network marketing companies are bad. Wink, wink. We're different. And I do appreciate that they're acknowledging that and that they're sharing some of those things. I just think the system in itself, you can have the greatest intentions in mind. I just think the system itself could be tricky because of just incentives. So I don't know. I don't have the right solution. I know that they probably do joint work and all that stuff. I know that for a fact. But then you even look at like how well do these people actually understand what they're doing? I don't say this in any disrespect. Matt, including me, is more charismatic, got more energy. I mean, clearly don't mess with his track record. So I'm going to give him his flowers. But I put up every one of our coaches at Better Wealth has more technical knowledge than Matt. Now, I don't even think he would argue with that because he's not, he's the face of something. So maybe the people below are really technical. I didn't necessarily see it. And what I did witness on stage was very motivational, was very much like, you can get this, like you can become this, like look at us, like we started with nothing, now we're like, and so it's very built around recruit, build this as a business opportunity that can change your family's life, and which is fine. That's awesome. But then it's like, well, that the exact opposite was my epiphany. Like my epiphany was like, whoa, when insurance is set up and used properly, this could like change someone's financial future in life. Let me become obsessed with that, and then the money will follow. Maybe I say that from a place of privilege. I even talked to a guy earlier today, Dom, who's like asking about insurance, and I'm like, I don't think you should get into the insurance space if you need money. Like it might be a long-term way, but I think people can sense it. I feel like there's corners that can be cut. And obviously it's like, if everyone followed my advice, it could be terrible things for the industry. I just think like it's one thing if you're selling cars or selling a product. It's one thing if people feel that commission breath and like, okay, we can get over that. Even though you're not a fiduciary, you still should have a fiduciary standard when it comes to helping people with their money. And that's what I think is easily overlooked when it comes to these models. And I think it's really hard to get it right, because it's like, how do you get it right when it comes to that system? So I think, again, not going to speak for you, but I think that is the challenge, and that was mentioned. But then I also just think, maybe if Matt was sitting across the table from me on a non-recorded line, just for the record, this did not happen. He may open up on things and be like, yeah, that's the trade-off. It's like, sometimes you got to choose the good and the bad. It's like, we don't have the reach that they have. They're able to reach people that we would never reach. We might do something a better way, but what's better if you're talking to a family that doesn't have insurance? So I think it's I think you got to look at that. But then the other thing that I would challenge him, and I didn't say this to him, but if we had another conversation and a non-recorded, I would say, dude, how do you get the whole incentive, but like, could you like refer them to an advisor and figure out a way for them to get paid? Like, is there enough money to like, hey, I'm going to refer you to a person that's going to like serve you extremely well. This person's going to be salaried with a little bit of upside. Shocker. That's a model that we like at Better Wealth. And then you create a world of incentive to get people to talk to that advisor, versus the person that you're recruiting off the street is now becoming the person that's going to help you with money. It's like, it's like, how does that compound well? I don't know.
So if you ask ChatGPT, how many agents does PHP have? So this is not me citing a source by no means, but it does say it goes directly to their agency. There's 50,000 licensed agents, 50,000. And so the idea of taking 50,000 agents and being able to create some type of consistency plan, platform where you can essentially create a better way to help people sell these financial products, I think is going to be very challenging. I use this example a lot in business, where you essentially start in business, and if you allow it to grow to a massive company and culture is really bad, it's really hard to start over and create really good culture with such a massive organization. You have to start with the foundation, and when you're smaller, to create really good culture so you can grow into it as you grow larger. Because now they're so large, I'd be very fascinated to know, is there even a fathomable possible way to create some type of way with 50,000 agents to create such a program that allows it to essentially like mimic what we would call a better way for like true financial planning / insurance, solutions. I don't think so. I just think it's so large at this point. Like, you either choose to pour gasoline on the fire, or you almost have to take a step back and like rebrand to some degree or another. And I think that with him, he cares so much about at least the thing, which is insuring and protecting, that I don't know if he actually really cares about, quote unquote, like the better way of like a design, like PUA to base, like IUL versus whole life, as much as like, as long as these families are protected, and that's what matters the most. Which, to some, I kind of respect it to some degree or another. I'm not necessarily like I believe that, right? Because like you said it best, when you're selling a lotion or even a travel agency, whatever, it's like you pay $200, $250 a month to either get the subscription, to be part of the organization, and get auto renewal. The only person it affects is you. Like, that's it. But if you put somebody like a Kyle Busch situation and do a multi-million-dollar insurance policy per year, you're changing their trajectory of their life in a pretty drastic way. Like, for me, my life didn't change financially because I was paying $200 a month. My actual life actually got better, because that's how network marketing naturally works. If you like apply yourself, is like you do get the motivational raw, like, let's go. You learn to sell, communicate, like get over your fear. So those are the things that I really do love about it. Like, I still remember the conventions I went to, and I was like, oh man, like everybody's here about to like run straight through a wall afterwards, right? And so those are like the good, encouraging parts. So when he's on stage and he's speaking with passion and like, you can do this for yourself and your family. And even in my video that I did, that's like, you could call it a little cringy, or like I say, it's gets a little scammy. At the very beginning, he starts to talk about like, this is for you, mama. And like everybody's like screaming and things like that. Like to some degree, that's actually very powerful. And sometimes we need that in life to just like get up off the couch to make and do and be better. So there's a lot of really cool things that I really do appreciate about what they're doing. And then on the other side, obviously, there's some things that could be improved. And I honestly, I don't know, you have to do it just one day at a time, one mission at a time, one person at a time to find the best way to do it operationally. It would be fun to figure out. Like I would love, like that would be exciting and fun to work through that. But nonetheless, 50, I just wanted to just like fathom like 26 billion for 50,000 agents. That also shows what you said of like the ratio per people that are actually probably selling.
Yeah.
Like there's so many people and hardly any of them are doing anything. Right. And it's like, we are 8 times smaller. And I would assume they were like, 100 times larger with like how well they're known, being connected to Patrick McDavid and all this stuff. And so for me, it's just like kind of like, man, the turnover rate is 90% in the industry as a whole. Then you start adding network marketing to it. Then you start adding IULs to it. And it starts to become like smaller and smaller and smaller people that actually stick around. And even there's a study that shows if you sell 25 policies in a year, the turnover rate is still 50% in the industry. So that's still a lot, even after you had some success. It's just a very difficult industry to be in.
Yeah. No, it's fascinating and looking forward to that interview to be coming out. And I do, again, I appreciate the space that we give ourselves to be able to talk about, because before no one would know the backstory. And I think it's cool. It's going to be a fun year. And there's some big names on our dream interview list. So stay tuned. We'll see. It'd be really, really fun to start knocking down some big names.
Amazing.
Most people have no idea where to start or how to really evaluate whole life insurance. That's why we've built The Vault. It's all of our best life insurance resources and educational tools all in one place, all for free. We have calculators, handbooks, crash course, deep dive videos on numbers. If you want to learn more, click the link in the description or tag comment below to unlock The Vault. All right, back to the video.
So, Caleb, this may be a good time to just pivot to some Q&A. One of the questions is, and we can end with this, is what situation when IUL makes sense? I would love to ask you the question so that the listeners can hear, because I was very curious on what his response actually was to when you asked whole life versus IUL, like when does it, like what does he think about it? And then for you go ahead and answer the question of like what situation in your opinion would actually make sense for an IUL.
So I think
that's one.
Yeah. So I shared, I was struggling to find a framework, but I think the framework that if I had to summarize this framework would be protection matters, and there's temporary protection and permanent protection. And permanent protection, the benefit comes with a retirement supplement. Okay. And so if that's his headspace, it's protection and then retirement supplement. And so I think if you just straight up, that's your goal and you have the ability to sell an IUL or whole life, and you're maybe not crazy technical, you believe, and one of his mentors is Doug Andrews, who's been mentoring him for 20 plus years. That tells you everything you need to know. If you know who Doug Andrews is, he's big into IUL. That's really so he just says he prefers it because he believes he's going to outperform whole life by 1% to 2% over the long period of time. And in some cases, he's not wrong. I would give him that. And I did also mention, I said, that's where I did mention about it being a lot more technical and it potentially blowing up and people getting out of the space. And his talking point was, well, isn't it great that insurance companies service that business even if your agent is out? Yeah, so I was like, oh, that's nice. Or it gives you the ability to service. So it's like his whole deal is like maybe your agent got out, but now you can find another person to service that for you. So yeah, I mean, I think time will tell. But yeah, if I was, how do I say this in a really nice way? IULs are sexier and easier to sell. And, if I didn't know what I didn't know, I would sell them. I would rather sell an IUL than a whole life. Not even to say that I get paid more. I don't necessarily care about that. It's just like the story itself is a lot cooler. So I would say that. Do you want my answer of what situation would an IUL make sense?
Yeah, it seems like it'd roll quite nicely into your answer now.
Yeah, so I think two things. If you are looking at buckets of money and you're like, hey, listen, I want this to be a retirement supplement and I want to put money in a place, potentially get income out or potentially use in the future. And I do not have an expectation to borrow against or do infinite banking. I think there could be an argument to be made over a long period of time. An IUL that's structured properly could give you that extra boost. And so if monitored properly, it would be one of the reasons, if we were looking at pros and cons, to it's like, why would someone do the pros? Well, you're going to take on more risk and potentially more things that might not be good. Why are you going to do that? Because of the potential for it to perform better. So I'll give them that. Whereas like if they like the idea of the tax-free wrapper and all, they didn't necessarily have any value for like borrowing against. The IUL, once set up and structured properly, potentially gives you the ability to have better performance in the whole life. The other reason, and I think it's a bigger reason, is IULs potentially could be really good for estate planning, and it gives you a lot of flexibility when it comes to death benefit and and maybe allows fewer dollars to buy permanent death benefit that could be really valuable for trust or certain estate plans. And so you'll see with family offices, you'll see very sophisticated people use an IUL chassis for some of the same reasons we hate it, because it gives a lot of flexibility, which is great if you have representation, you really know what you're doing. It can give you options. And if that doesn't scare you, yeah, awesome. And so for those two reasons, that's where I don't. Which, by the way, I just want to share one other thing. I asked Matt Sapaula about Curtis Ray, and he didn't even know who Curtis Ray was. So that just goes to show. He's like, Curtis who? I was like, never mind. It's a guy I thought you would have heard of. Which just goes to show why did I mention Curtis Ray? It's like I don't love his strategy at all. Put money into IUL and then leverage it to buy more insurance. Like, number one, I think that's a disaster waiting to happen. But I just that would not be a strategy that I would endorse. Could it work? Sure, potentially. But I think you're playing with fire, and so that so those would be the two areas. And obviously, big disclaimer when it comes to retirement supplement. There's a disclaimer tied to that, but I think it would be disingenuous if I didn't at least mention that as a bucket alternative to whole life. And time will tell. 20, 30 years, we'll all look at and we'll have case studies. And what I bet you is there will be certain IULs that will shine. There'll be a lot of IULs that won't. And it will probably be like even fewer people get results, just like the same. Most people don't get what the market gets over 30 years because of emotion fees and all. So I think for the same reason, not everyone's going to fully benefit from the power of an IUL.
Amazing. I love the answer. And also, I have even more respect for Matt after your response about Curtis Ray, to be able to just put your head down. Yeah. Especially because he does content. Like, it's not like he doesn't do content. Like, he's a face and does content as well. For him to do content, be out there and just say, hey, I'm going to just go build, put my head down and create my content and not like, look out there who else is out there. Because you would know if like you're doing content and you're in the space of insurance and you're like aware, you would know who Curtis Ray is just by sheer what he does is just like so different than anything else that you just almost have to hear about at some point. So mad respect.
Yeah.
Amazing. All right, let's go into the next question. All right, so question number 2. This seems like a good alternative to a HELOC or 401k loan. Amazing. So, yes, I mean that's a simple answer. Is this can be an incredible? Yes, next it is. Next question. Let's move on.
Is that a question or a statement?
Yeah, exactly. It does end with a question mark, so you gotta go there. So I am a big fan in general in different tools and for different financial products for different reasons. And understanding how the financial product works and the tool works, I think is a big bonus. You should probably never use a financial tool unless you really know how it functions. And the idea of a HELOC is very powerful in a lot of ways because it gives you more control over more funds to be able to go borrow against and use for a specific reason. And that's exactly what life insurance does at the end of the day. It allows you to collateralize versus something, just like in a home. You collateralize versus the home, being able to get a line of credit to use for an X activity. And so it's literally the same function, and it just gives you more access to more capital. One of the better benefits on top of it is that you get a death benefit. And there's so much benefit in regards to having a death benefit along with control of capital, and that it gives your dollars more than one job. Now, when we're looking at it from a 401k loan, I do believe that the 401k loan just has a lot more inherent risks for it. It's not even borrowing against it in a lot of ways. Like it's actually functionality from the loan is a lot different. And you have to worry about the risks and the laws and the penalties with can you leave, can you not, like your actual employer and what that result will look like if you do. And so I'm just not necessarily I would not necessarily compare a 401k loan to a life insurance loan just because I do think that they are inherently different. But I would compare a HELOC to a life insurance loan pretty directly, just obviously different financial products.
Well said. Well said.
Amazing.
Next question is a couple takes here, and I'll read the whole thing first. So the question goes, well, if you borrow against your cash value at 5% versus a bank loan at 8%, you should go with the 5%, right? But instead of paying back 5%, you pay 8%, therefore capturing the extra 3% back into your policy. Isn't that arbitrage? Let me we might need to do a whole episode on this comment. So let me break this down into two things. So first question: if you borrow at 5% versus a bank loan at 8%, you should take the 5%. That's the statement being made with a question mark. If all we care about is math, the answer is yes, because 5 is cheaper than 8. 5 is cheaper than 8. Put it on a t-shirt. 5 is cheaper than 8. Mathematically, you're better off doing that. So, and I would say the same thing if it was the roles were reversed. Life insurance was 8% versus 5%. Bank loan, 5 is cheaper than 8. So just be really consistent. Now, that doesn't mean that you should always take your cash value loan. Here's why. Because you don't have unlimited money. And so, for example, if there is someone willing to lend me money on cars and homes, but they're not necessarily giving me money for investments or business, I could say, hey, I'm going to buy a car and I could potentially get a better rate from my policy versus a bank or the car company. So if that's the case, I'll just take my policy. Mathematically, you'd be correct. The problem that you're doing is you're losing less liquidity. You have less money to be able to say yes to the next decision. Now, for some of you, that opportunity cost is 0. For others of you, that opportunity cost could be 20, 30, 40%. You want to talk about arbitrage, that's way different than potentially paying 8% and having control to your money. So I think the essence is just understanding your opportunity cost of liquidity and control, and that that's like a part 2 to why, like, when you should take policy loans or not. So yes, mathematically, if all we cared about was math, take the cheaper money. But you also have to factor in that you can't just go to a bank and say, hey, can I have this like business loan on this like this no-brainer business idea that I have? The answer is going to be no, or it's going to be a pain in the butt to try to go through. Or it's like, hey, I have this alternative investment that I would love, or hey, the stock market just dropped by 30%. I would love to buy low. Okay, you can buy with what you have, but a bank's not just going to lend you money on the spot to do that. And so that needs to be factored in. They will give you pretty cheap loans for homes and cars. Not saying a lot of people are buying too big of homes and too nice of cars, and so that's enabled from debt. But I'm just saying, if you're already going to buy something, that's another conversation that needs to be had when it comes to policy loans. So that's the first question. Dom, do you feel like I answered that, or anything that you want to clarify before I go on to the next point?
Well, you talked about this is a whole episode. Let's make it happen.
The next thing is, but instead of paying back at 5%, you pay back at 8%. This is classic Nelson Nash. Okay, your policy loan's at 5%, the market's at 8%, you care more about your family than your bankers, pay yourself the extra 3%. So now you're recapturing that 3%, which is just paying back your loan faster, and then hopefully you'll put more money into insurance. That could be through PUAs, that could be through another policy. So the idea is you're paying an extra 3%, you're going to end up paying back that loan faster, but then you're going to stick to that original loan schedule and then pay the additional 3% towards your life insurance policy in some way. Okay. And so, yeah, that's great. But then the question, is that arbitrage? Now, it's interesting. The idea of arbitrage is, and I just looked this up quickly, it's making a profit by exploiting a price difference in the same asset in a different market forms. So in other words, in plain English, it's buying low in one place and selling high. So the idea of arbitrage is like, if I can borrow at 5% and make 7%, think about that. If I'm borrowing $100, I'm paying $5 to earn 7. So I'm paying 5, earning 7. That's a profit of $2. I'm in a way, whether it's loans or it's selling, it's buying in stocks, it's kind of the same thing. If it costs me, that's why we call it control cost, Dom. If it costs me $5 to control this unit, but this unit gives me an additional $2 after the cost of control, well, now I made $2 on $5. Like, that's a pretty great rate of return. It's a 40% rate of return if you measure it that way. And so where I struggle with arbitrage is it's your own money. You're like, it's like, am I arbitraging by, you know what I'm going to do? I'm going to pay myself more money. And that's arbitrage. That's a good thing. It's a good behavior. Like, saving money is a good thing. And I think it's a great habit to get into around, hey, I'm going to look at the market rate and pay whether you use life insurance or not. I have money in a savings account. I'm going to buy this car with cash and the market rate's 6%. I'm going to pay myself back with 6% interest. I think that's great. I think that's amazing. It's not arbitrage. It's not like a super like math. Like, it's just like, it's your own money. Like, that's the thing. It's like newsflash, save more money. It's the idea of when Nelson Nash talked about the shot analogy, which probably didn't age well with a lot of the people. A lot of the people that are into what he's talking about are probably not the biggest fans of taking shots. But the idea is like, what kills you, the volume or the rate of it going into your arm? It's obviously the volume. And our whole goal should be to save more. I wouldn't necessarily put that in arbitrage conversation, but I would put that in just being a really smart financial decision, is just saving more. And by paying yourself back more, that's not arbitrage, but that's really smart financially. So hopefully that made sense from a standpoint of the technical answer. 5 is cheaper than 8. So if all we care about is math, you're correct. But there's some cases, and there's actually many cases where I would pay extra interest for control and flexibility. And then I don't believe you get extra arbitrage by paying money out of your own pocket. It's like, hey, is this arbitrage? I took $3 out of this pocket to put in this pocket. No, it might be smart because this pocket over here might be like a better vehicle than where it's over here. So that's great. But you're not necessarily buying low, selling high.
Yeah, no, for sure. I would say what you just described is just being more efficient with your money, right? Being able to use your policy versus the bank, paying it back that way is just a lot more efficient. I think the idea of arbitrage is the application of consisting of two different functions that work in a specific way to get the arbitrage, whether it's 2 different asset classes, a growth versus a loan. In this instance, you're not really using the bank at all. You're just asking the question, should I use the bank or should I not? So the bank in this question isn't actually being applicable. It's really just one function, which is your policy, paying that down instead. So you can't have arbitrage unless you actually have 2 different functions of an asset. And so, yeah, well said, Caleb. Well said. All right, last question. Why are you showing the illustration from the non-guaranteed page, ? There's also a guaranteed page that you didn't show, which is very misleading. Amazing. So the first thing I would like to ask this individual is, what's misleading about it? And that's what I would love to know before I would answer this if I was with them. Now, when I am communicating or having a conversation with somebody, I say, hey, this policy essentially has two sides. There's a guaranteed and non-guaranteed. The guaranteed functions X, the non-guaranteed functions in a different way. I don't necessarily show very in-depth of the guaranteed side. So when somebody says, hey, you're not showing the guaranteed, you're only showing the non-guaranteed, it's misleading. I'd say, yeah, like I usually only show the non-guaranteed from my personal opinion, because the non-guaranteed side is actually the more accurate side. It is the side that is more likely going to happen because of the way that the policy functions within dividends. The first second that a dividend is paid to the policy, the guaranteed side is essentially null in like the numbers that you'll see. Because a dividend is paid, you now have non-guaranteed that's built into it. You now have a new guaranteed floor that's created because you have dividends that built on top of it. So the guaranteed is saying, hey, worst case scenario, the world fell apart from day one, like from this policy started, and you were no longer going to get a dividend ever again, which that's not really possible with the companies that we use, how they're designed, et cetera. The guaranteed, in my opinion, is actually very misleading and doesn't help paint the full picture of how the policy would actually perform. So, if somebody wanted to see it, I would explain to it and show it to them, but it's not necessarily my go-to because I don't believe that it's actually the thing that'll help them the most.
Well said. And I also think, knock on wood, anything could happen, but with interest rates being where they are, we're illustrating at really like historically low interest rates, period. So yeah, could they get lower? They could. Could they get higher? Yes. Whereas like in the 80s, you're looking at, the illustrations would be bonkers. And so I'm just saying like there's something to say about, when you're more close to the guaranteed column there, and when you look at history, interest rates they're way more accurate. I'm not saying that they're spot on there. It's no illustration is going to be spot on over 30 years. A lot more spot on. I can confidently say this, and it's a matter of fact. Way more spot on over the next 30 years from now versus in the 80s, because there's just less, unless I have to apologize because your illustration looks better than original. But that's the other thing that I'll just say is there's it's a lot more conservative just by the time that we're alive. So I think that's another factor to just acknowledge, but very much like what you mentioned there.
Amazing. All right. With that being said, that is the end of our Q&A. That's the end of this episode. If you like anything that we said, please drop a comment, share your perspective on anything relative to PHP, the insurance industry as a whole. If you have any other questions that you'd like us to answer in Q&A for future episodes, please let us know as well. And as always, we are experts in overfunded whole life insurance, an asset class that gives you liquidity control. And if you want somebody that can design it for you for that specific purpose, we believe that we are world-class at it. And so feel free to click the link below and book a call with our team. That being said, until next time.
I only went for a day, and that was my biggest regret, because people start to see something in themselves they haven't seen before.
I'm just so grateful